So I think that's all the numbers I have. So I don't want to listen to me talk anymore. I want to hear Alex. Alex is going to come on and he's going to talk all about Nexus. He has a nice presentation and he's going to go through the products and why you should go with the Nexus. So super excited. If you need anything from me, Alex, just let me know. But I'm going to shut up and I'm going to let you take over.
Awesome. Well, I appreciate it, Chandler. Thanks so much. It's been great, having our text exchange and getting to know you, your team, the base shop, and also the entire Alliance family, right? Super exciting. And thank you all for joining on YouTube. I sincerely appreciate that the time you're taking out of your busy schedules to come listen to me talk about our fixed indexed annuity suite we offer you all at Annexus, and truly to see if you can kind of enhance the bag of annuities you can offer your clients, right? Now, who is Annexus? Who is myself, Alex? Well, Annexus is a product development company. We're located in Scottsdale, Arizona. There's about 160 employees. And to put it bluntly, we build some of the most well-powered fixed indexed annuities in the industry that you offer your clients through exclusive distribution partnerships, right? My name is Alex Savarese. I'm a Vice President, National Sales Director. I am dedicated to the Alliance distribution partnership. And it's super awesome to work with you guys every single day. I do anything from case designs. I can help you all with pending applications, with suitability or NIGO issues. And then I do stuff like this, right? I do presentations. I also travel almost every other week, if not every week, to different offices around the country. So I really do it all. I like to think of a jack of all trades almost. But again, I'm here to help you guys not only learn our solutions, but also implement them into your client's portfolio. So really cool. Again, thank you all for joining us today. Annexus, right? I talked about it, and we're not just one insurance carrier, right? We're a product development company. We build a portfolio of products for our different insurance carrier partnerships, right? We're going to go over 3 of the 4 we have offered to you all today. But this is the Annexus 360 wheel, right? Everything we've built inside of our solutions is on this wheel. And in my opinion, I'd say 95 to 98% of your clients will fit into one of these benefits, whether it's an enhanced death benefit, a Social Security reduction benefit, income, or accumulation. We've got something for your clients. Now, with that being said, I am going to go over a lot of different product in my overview today. All of you, or most of you, if this is your first time seeing it, will not be experts in these solutions by the end of the session, right? That's just how it is. It's a ton of information, a ton of features. What I ask of you all is to reach out to me and get me involved in the case design process. There's 4 carriers we work with. That's 4 or 5 different solutions. I will help you design the solution that fits best with your client. Although I can't talk to your client, I am happy to help and work extensively with you all. That being said, again, just give us a chance with each of your clients, right? Get us in the mix. We may not win every single one of your clients' policies, their premiums, but please just reach out to me and give us a chance to work with you. We will make sure that we do the best we can in getting you the right solution for the right client, right? Now, who is Annexus? These 3 rings is what perfectly defines Annexus. The Olympics have 5, and Annexus has 3. This is everything we're bringing together for you all. We have the strategic partners, the product development, and then the exclusive distribution. The exclusive distribution is you all. In the industry, only about 3% of insurance producers or insurance agents and financial advisors have access to our solutions. Not just every advisor down the street that your client comes in contact with has the opportunity to use these solutions. Through integrity, because we're an integrity company as well, the Alliance has that access. You have a leg up on your competition. That is incredibly exciting. If you're this is your first call with us, you're just joining the business, you're newly licensed. How cool is that you have exclusive distribution with Annexus for fixed indexed annuities? But one thing I do want to highlight is the elite network of strategic partners. I think everyone on this call recognizes at least 2 to 3 different companies on here. These are all partners of Annexus. We're not going to get there yet, but we all know Nationwide. We know Athene, Barclays, John Hancock, Morgan Stanley, JP Morgan, Bank of America. I'll give you a statistic. John Hancock has been around for 160 years. They have never done, they've never had a partner outside of their own company to build a product for them. Annexus, we were the first ones to do that. You all know who Goldman Sachs is, right? NASDAQ. Look at the one in the bottom left, NYSC. That's the New York Stock Exchange. Annexus is a partner through some of our indices of the New York Stock Exchange. We actually do tours of the stock exchange for our partners. The only way you get onto the New York Stock Exchange trading floor is if your company's going public, you work there, or you're an exclusive partner. We are able to bring our advisors, our agents to the stock exchange floor for a tour. And we also, the very next day, go to Goldman Sachs, the 42nd floor, overlooking the Hudson River for a business meeting. You want to talk about growing your own business, being your own entrepreneur? How cool of an opportunity is that? Not only do you get pictures on the stock exchange trading floor, you also go to Goldman Sachs the very next day for a meeting, right? This is what we're bringing to the table for Alliance agents. Now, it's a competition, right? You have to have premium. I'm happy to talk to Robbie, Chris, Andy, whoever we need to talk to maybe do an event like this, a competition. But we are happy to do things and bring this to the table for you all. So those are just some of our strategic partners, right? Now, the product development. What are we bringing to the table? What are we doing inside of our own company? Well, when we provide these products for you, one we just came out with in February with one of our new insurance carriers, but the product development team itself is made up of over 40 actuaries and quants every day trying to figure out a new need inside of our industry for our clients, right? Not only that, but you saw the strategic partners on the previous page. There's over 180 investment bank and asset managers that work with us. And I'm not talking about just some 24-year-old associate at an investment bank. These are VPs and managing directors that we have direct partnerships that we get an inside look on all new things that they're coming out with, right? Including indices, maybe some new potential product ideas. This is the team that is bringing the product development to Annexus and to our partners. So 40 plus actuaries and quants and over 180 investment bank and asset managers. Now, with that product development, this is everything we've been the first in the industry to offer our partners and our clients, right? I'm not going to go through all of these, but look at some of this stuff. Uncapped crediting strategies. Annexus was able to do that. We were the first ones to do that. Crediting on gains to date, tracking values daily. These are all patents inside of Annexus, right? 100% par rates. That seems like a no-brainer now, right? Who doesn't have over 100% par rates? We were the first ones to do that. Performance strategy ladder, 4-in-1 retirement benefits rider, all Annexus, an RMD sales solution, guaranteed income plus accumulation. This is what Annexus is bringing to the table. My favorite quote that I've heard from our co-founder and CEO Ron Schertz is be the first, be the best, or change the game. And this is what we do. This is Annexus through and through. Now, here it is. Since 2005, since our inception, we have done over $90 billion in premium throughout our exclusive distribution partners. 90 billion with a B, total combined sales. So if anyone's on this call that has even just one case with us, one fixed indexed annuity, thank you. We appreciate the partnership. We appreciate the business. And with everything we just went over, we will continue to come out with and enhance some of the already most well-designed fixed indexed annuity solutions in the marketplace, right? So although we're not the biggest company, this proves that we have one of the biggest footprints and kind of proves what we're doing is working, right? So with that being said, I talked about going over three separate carriers, three separate products today. This is what we're going to dive into now. The first one, this is by far one of our most popular solutions that we've come out with to date. This product was officially announced originally in 2014. Since then, it's done close to $45 billion in premium over the last 12 years. 45 with a B. This is our nationwide New Heights Select 9 guaranteed income solution. And this is the #1 selling income FIA for the past 7 years in a row, from 2018 to 2024, the #1 seller. You want to talk about having conviction, confidence in what you're doing? Talk about joining a new company like the Alliance, joining the Davies team. You have solutions in your bag to offer your clients like this, right? Client comes to you looking for income. Well, I've got the number one seller, right? The number one income solution. And oh, by the way, that's with Nationwide. Have your clients ever heard of that company? We all know the jingle, right? This is a household name inside of this country that you can offer to your clients. We talk about making two different sales, right? Some other insurance carriers aren't household names, right? So when you go to them saying you have an income product with a different carrier, you have to start with selling the carrier first. You got to sell the carrier. And then when you finally get through that, if they even want to listen to what the product is, you have to sell the product. With Nationwide, you're just going in and saying, I've got a guaranteed income with Nationwide. By the way, this is the number one selling income FIA for the past 7 years. And by the way, I'm pretty sure that 7 is going to go to an 8. We just need to get through some few more weeks of crossing the T's and dotting the I's there. But again, 7-time number one selling income FIA. The story, what does it consist of, right? It is incredibly easy on the income rider. 3 numbers. If your client or yourself can remember these 3 numbers, you're more than 80% of the way there to mastering this solution. 30. That's a 30% income benefit based bonus immediately credited on day one. $100,000 goes into the policy. Your client immediately starts with $130,000. The 9.5, that's a 9.5% compounding annual roll-up that's credited daily for up to 12 years, which is the 3rd number. Your client's going to get 9.5% every single year for the first 12 years. And oh, by the way, that's credited every single day. That big number, the 380%, if your client does not turn on income before year 12, the minimum income benefit base is guaranteed to more than triple. Your client puts in $100,000, that income benefit base by year 12 is guaranteed to grow to $386,000. Guaranteed. So 30, 9.5, and 12. Folks, this is the highest guarantees we've ever had on this income rider. Now, it's not going anywhere anytime soon, but it absolutely can change, right? We're seeing how volatile the market is right now. We're seeing interest rates. The current administration, the past year has been dying to cut interest rates. If that's changed, if those interest rates are cut, hey, maybe this bonus and roll-up have to change, right? Down the line. I don't know. I haven't heard anything. But what I'm trying to tell you is if you have any clients that are looking for an income, take advantage of these guarantees right now. Fire sale this solution to your clients. Don't let them wait. If they give you the runaround of, oh, I need to talk to someone, I need to wait, let me take a look, use that to your advantage. Say, look, I've got this great, it's the highest guarantees this has ever had. Go ahead, take your time, but I want to lock this in for you while I can. I don't know how long these are going to last. Use that to your advantage. Now, for my visual learners, here's what it looks like on a chart. A 60-year-old purchases a $100,000 New Heights Select policy. They use that 30 and 9.5% income rider. That 30% bonus is in green, and then that 9.5% compounding annual roll-up for the first 12 years is that steady increasing blue line. But you'll notice the guarantees end at year 12 when the client turns 72. Well, like I said in the previous slide, this is your client's worst case scenario. What happens when you put index performance into this? Well, that gold squiggly line is exactly that. That is hypothetical index performance. If my indices ever outperform the guarantees in the contract, my client gets the higher of the two credited to their income benefit base. I'll put it to you this way. If the gold line at any point goes above the blue one, my client gets an income raise the very next month. So look at that. Take a look at those 12 years and beyond. That's an income increase for your client, and they don't have to wait the very next year. That increases their income the very next month. Now, I alluded to it on the first page with the income rider numbers, but we are truly helping your clients retire on their terms, not the insurance carrier. We are putting $1 more in your client's pocket. That 9.5%, that's annual. Excuse me. But a little piece of that is credited every single day. 9.5% annual, but take that number, divide it by 365. That's roughly the percentage that's credited to your client's income benefit base every day for 12 years. Why is that important? Why should your client want that? Why should you want that for your client? Well, I'll put it to you this way. Let's say Chandler's my client, and on Chandler, you don't need to respond, but I am going to use you as an example here. Chandler's my client. He's looking for a guaranteed income stream for his retirement. He purchases a New Heights Select policy. 2.5 years in, or 2 years and 6 months in, he comes to me and says, Alex, I'm ready to turn on income. Well, I can say to Chandler, because we credit daily and credit on gains to date, I say to Chandler, okay, since you're turning on income 2 years and 6 months into this policy, your income benefit base, that guaranteed income stream, is going to have 2 years and 6 months of that 9.5% interest credited to the income benefit base. If you take 12 and you take 365 times it by 12, that's 4,380 days. Your client's going to have a new income benefit base, a higher one than the previous day. Every day your client waits for the first 12 years to turn on income, they're locking in a higher income benefit base than the previous day. Now, what does it look like on the flip side? With a different carrier that can't credit on gains to date because they didn't build their product with Annexus. 2 years and 6 months in, Chandler says, I'm ready to turn on income. Well, because they don't credit on gains to date, his income benefit base is going to be based off of the value 6 months ago. He's losing out. Your client's losing out on 6 months of interest because they can't credit on gains to date. Over 12 years, they get one credit on the anniversary date every single year. Your client is leaving, you and your client are leaving money on the table if you're using a different product for income. That 6 months of interest goes back to the carrier. This is what Annexus is bringing to the table for your clients. Not only helping them retire on their terms, but helping them retire with confidence that they know they're going to be paid to the dollar what they deserve with this contract. Now, here's an example. We all know an Alice, right? She's 60 years old. She purchased a $100,000 New Heights Select policy. 10 years later, she starts taking income. Her income amount is $17,858 for the rest of her life. She can't outlive that amount. 10 years later, if she were to pass away, she's taken a total income of $197,000. She has a legacy. Her love money is $488,000. And all in, that's a total return of $686,000. Legacy, I called it love money. If they have a loved one, a loved thing, a school, library, grandchildren, children, anyone or anything they want to leave money to, that's where that $488,000 is going. Now, obviously works great for individuals. Works just as well for the joint income option. Mike and Sarah, they're 62 and 60 years old. They purchased a $100,000 New Heights Select policy. Deferred income for 10 years, $14,981 for the rest of both of their lives. If they both pass away by 80 and 82 years old, they've taken a total income of $150,000. They have a legacy of $354,000, and all in have a $496,000 return. And oh, by the way, a unique feature to only Nationwide is you can use qualified money like your old 401k for the joint income for co-annuitants. You can guarantee an income stream for both spouses with just an old 401k from one of them. That is completely unique to Nationwide. You need to reach out to me to go through specifics of that, but that's that spousal protection, spousal benefit. Please, please, please reach out to me if you have a joint income potential. Now, not going to go over this for the sake of the time we have today, but this is New Heights Select, Nationwide NewHeightsSelect.com. I am going to put this in the chat. If Chandler, you don't mind just throwing this in the YouTube. This is a client-approved website. There's no passwords. There's no logins. Your clients can use this. It goes through everything you'd want to know about Nationwide. So take a look at it. There's 2 guaranteed income calculators on here. I think that's a great way to start talking about it, having that conversation with your clients. If you want more information, I've got sales techniques and sales tools around those calculators. reach out to me. I'm happy to tell you about those. Now, that's our nationwide New Heights Select solution. Any of your clients looking for guaranteed income, it's a nationwide New Heights Select play. Now, the next two, these are more growth and accumulation, but they're a little bit different, right? There's a little bit different aspects to them. The first one, this is brand new as of the beginning of February, a brand new solution. And oh, by the way, this is only for integrity distribution channels, right? Not only is it exclusive to Annexus partners, but it's even more exclusive because it's only offered to different integrity companies, you being one of them. This is our Americo Benchmark Flex FIA. Two variations, both for growth and accumulation. The first one is your pure growth, pure accumulation. The second one is a bonus option. You have a 10% premium bonus option. Now, if you've ever talked to me before, you know my favorite term is there's no free lunch. What the carrier is giving you up front, they're going to pull back or make you pay for on the back end. In this case, Americo is giving you an upfront premium bonus. The strategy option rates are going to be slightly lower. I'm happy to send you both rate sheets for each version. But remember, two variations. This solution is for growth and accumulation. But what is this solution about? This is all S&P 500 strategy options. If you or your client are looking for those, this is the solution for you. And oh, by the way, for my newer alliance partners on here, this is a great solution to get started talking to your clients about because there are incredibly simple S&P 500 strategy options inside of this. The first one is so easy to understand, your clients are going to pick it up right away. The first one's an S&P 500 performance trigger on a 1-year point-to-point. You get crediting every 365 days. This is tracking the S&P 500. If the S&P 500 does 0, my client gets 7. If the S&P 500 does 3 over a 1-year strategy term, my client gets 7. If the S&P 500 does 10, what does my client get? 7. If the performance is greater than or equal to 0, my client receives a 7% interest credit. That is how simple this performance trigger is. And oh, by the way, it is with the S&P 500, a name brand your clients will recognize. So that is the first one, a performance trigger. I know we're not in person. I know this isn't as interactive, but I think that's all pretty easy to understand, pretty straightforward, right? There's no participation rates. There's nothing you really have to explain within the indices and what they're consistent of. This is the S&P 500. If it does 0 and above, my client gets 7 credited at the end of the 1-year strategy term. You can see here the trigger rate, and then you also have the most recent, right? Pretty simple and straightforward. The trigger rate actually beats the most recent performance. Now, the next one. This is our S&P 500 capped ladder strategy. You're going to see in our North American product the same thing, a performance strategy ladder, but they're a little bit different. Why is that? Because this one has caps. This is S&P 500 caps. What it is your client, their premium, their $100,000, let's call it, gets split over 5 different buckets. 20% of their premium or $20,000 goes into a different bucket. Each bucket goes across in a horizontal line, right? Each of them start with a different cap rate, all multiples of 8. But here's the key. You can see over the next 10 years, there's 14 crediting events. 6 of them will have that 40% cap, meaning 6 times your client's going to be able to track that S&P 500 performance all the way to a 40% cap. And oh, by the way, look at the middle bullet point. This is by far the most exciting part about this. These 8% cap rates are locked in and guaranteed for the full 10 years. For the entire 10-year surrender period, your client's cap rates are locked in. The ones you see on the screen, locked in. They cannot change. For any more experienced agents on the call, You've probably used an S&P 500 either index or cap rate, right? Probably used one before. I can almost guarantee you that if you have used one, when it comes up for renewal, they did not renew higher than what you originally bought it for. And I can almost guarantee you, or say very confidently, that they actually renewed for lower than what you originally purchased it for. I've heard caps that were issued at 8 and renewed at 1.5. Is that in the best interest of your client? Absolutely not. And can you sell that knowing in the back of your head they're probably going to lower those cap rates? Probably doesn't make you feel too good. What if you have something with cap rates that are locked in and guaranteed for the full 10-year ladder period? How cool is that? This is truly the first of its kind, and this is something I'm incredibly excited about. Again, for all this sort of stuff, reach out to me. I'm more than happy to provide you more information. You can see your cap rates on here, 8 to 40%. Well, look at the most recent, 7.13. Your client isn't even hitting the cap. They're getting about 90% of it. That's our S&P performance right here. Last 10-year returns. I'm going to skip right through this sort of stuff. I want to bring you to our final one on this. This is our brand new MYGA alternative. We're actually calling this a MYGIA. What is it? It's a MYGA combined with a FIA. 50%. Let's take $100,000. 50,000 of it goes into a fixed allocation with a guaranteed fixed interest rate of 5%. The other 50% or $50,000 goes into our S&P Prism Index with a 200% participation rate. So not only are you getting 5% fixed on half your money, your client's second half of the money is going to one of our best performing indices with live performance in the last 5 years of just over 3.1% with a 200% par. Your client's netting 6. All of these are simple and straightforward to understand. You have that S&P brand name you can bring to your clients, right? This is what we're bringing to the table. You can see here, average MYGA rates, just over 4.5% fixed, guaranteed for 5 years. Well, not only are you going to get a 5% guaranteed fixed rate for 5 years, you're going to get a 200% par rate on their S&P Prism. Now, the cool thing is you not only have the no bonus option, you have the bonus option. But look at the difference, right? Remember that capped ladder I spoke about? 8%? All right, well, it's a 5.75 caps. The 7% trigger, 4.75, right? The blended performance you're seeing, it's a 100% par rate and a 4.5% fixed rate. I'm not here to tell you which one is better for your client. If you want to have them have a bonus, premium bonus of 10%, that's completely fine. Here are your rates for that. But remember, the no bonus option right here. These are your rates for the no bonus, what we just went over. This S&P 500 distance stabilizer, I didn't touch on just for the sake of time, but this distance stabilizer has a 100% participation rate on the 2-year strategy term. A little bit about it. There's no volatility control. There's no bonds, no commodities inside of that index. And it is 93% correlated to the true S&P 500. 93% correlation, you're getting 100% of that performance on this index over 2-year strat terms. The other beautiful thing about this solution is you can mix and match these strategy options. You want to use 50% in the performance trigger, the 50% in the capped ladder, you can absolutely do that. You want to use all 4? Go ahead, go for it, right? Your clients can mix and match these strategy options. The last solution, before I do want to take a few minutes and open it up to some Q&A, you all know very well, this is the most popular solution or the most popular suite at NAA, right? This is our North American Secure Horizon suite. You all probably know who North American is. They're over a 100-year-old company. They're A+ rated across all major ratings agencies. I know this is often overlooked, right? Ratings. Everyone kind of flexes them, brags about them. This is incredibly important for your clients, right? The claims paying abilities of these insurance carriers. You don't want to just put your client in a B-rated carrier that you don't even know if is going to be there in 10 to 15 years. North American is a 100-year-old company. They're not going anywhere, right? They're not just some garage band insurance carrier. These are the indices that are offered. You have Loomis Sales, the NYSE Gears Index, again, New York Stock Exchange, research affiliates, and then you have 3 S&P options on this. And oh, by the way, that S&P 500 distance stabilizer is offered on this suite for North American. Remember, 93% correlated to the true S&P 500, no vol control, no bonds, no commodities. This is offered in our entire suite at Annexus. What's the first option? This is pure growth, pure accumulation. You have 1 and 2 year strategy terms, but you also have that performance strategy ladder we talked about in America, but it looks a little different. This is all based off of index performance and participation rates. Why your client would want to use this is the par rates. Look at that. On the 5-year strategy term, your client is getting 485% of whatever index performance there was over those 5 years. The 1 year has 220%. By the way, both ladders in each product is set it and forget it. Your client doesn't ever have to manually, or yourself ever manually do anything. For these entire 10 years, it all is automatically going to happen for them. But same thing, 14 crediting events over the next 10 years. 6 of those are going to have that 485% participation rate. By the way, for this solution, I just mentioned it on the previous slide. There are 1 and 2 year strategy options for this. They don't need to use the ladder. There is there if they want to. I think in my opinion, going with the ladder, at least for a portion of your money, is definitely something to consider, but they absolutely don't have to use it at all, or don't have to for all of their money. They can split it up across different strategy options. Now, here's the most popular variation of this solution at the Alliance. It is the same as the Secure Horizon, but right now has up to a 17% premium bonus for no additional charge. Your client puts $100,000 in. On day 1, they have a $17,000 credit to their accumulation value. And unlike that nationwide bonus, that's an income bonus. There's no walkaway money factor to that. This 17% bonus goes to them as a death benefit or surrender value if they choose to move the money or if they eventually pass away. Now, there's no free lunch. Like I said with Americo, par rates are going to be lower. The highest par rate offered is 360%, but that's still incredibly high. And you still have the same diversified portfolio of indices that's offered across this entire suite. Now, the ladder, it works the same way, but look at that par rate on the 5-year, 360% instead of 485. You still have 14 crediting events over these 10 years. 6 of those have the 5-year strategy term of that 360%. Now, you also have 1 and 2 year strategy terms offered within this, but this is a 17% premium bonus directly for your clients with incredible crediting opportunities with these high participation rates. Again, I can't make that decision for your clients or yourself, but the bonus with bonus option is probably the most popular variation at the Alliance. Also, what's the difference between Americo and the North American? Where would you use either? That comes down to your clients again. Where I'm seeing North American being used is for clients that want that bonus. They want a big premium bonus and they want some higher growth potential, because these are all uncapped for index performance, right? The indices will never be capped inside of this product. This is where I'd go for that type of accumulation. If your client's more familiar with the S&P, they want that S&P exposure, absolutely use Americo. Very, very simple and easy to understand with a brand name. So you have Secure Horizon, no bonus, but the highest participation rates offered in the solution. You then have North American Secure Horizon Accelerator. Has up to a 17% bonus, but has slightly lower participation rates. Now, The final one. This is the big one, right? This is your big Mac or Ram truck that has the richest premium bonus on your platform of 22%. 22% bonus. Your client puts $100,000 in on day one, they immediately start with $122,000. It also includes that performance strategy ladder, 1 and 2 year point to points, but also the performance strategy ladder. Look at these par rates. Remember, not only are you getting a rider, you're getting the richest bonus, premium bonus offered on the Alliance's platform. Those par rates are going to be slightly lower. The highest one is 270%. Still, your client is getting 270% on whatever index performance there is over those 5 years. Again, works the same exact way. 14 crediting events over 10 years, 6 of those being on the 5-year strategy term. Here's the rider. We talk about estate planning. I know that is incredibly important to your business. Their overall estate, there's different solutions for each one. This rider fits in incredibly well to your overall estate planning work. This is a 4-in-1 retirement benefits rider that is truly closing the retirement gap for your clients in their peace of mind inside of their overall retirement kind of age. 4 benefits, the price of one rider. Each considers and is supposed to benefit your client from a potential risk they'll see in retirement. The first one, Social Security reduction. Not incredibly important right now, but by 2033, Social Security is projected to become depleted. That is going to be a huge issue as we get later and later into the 2030s, right? Take care of that. Cover that for your clients. It's a 12-year payout. Pays the clients out an enhanced amount over 12 years. The next one, by far the most popular one on this rider right now, is an ADL benefit. You want to talk about a good long-term care or life insurance alternative? Maybe my more experienced agents have had clients denied long-term care or life insurance. This is a great alternative for them. Pays them out an enhanced amount of their benefit base over 7 years. Now, the third one, I wish this was actually fourth, but this is leaving a lasting legacy. This is an enhanced death benefit. They can only use one of the 4 benefits on this rider. However, your client will use one of the 4 because if they don't use any of the 3 living benefits, their beneficiaries can take advantage of the enhanced death benefit. It's a 5-year payout for those beneficiaries. The last one, we see retirees living longer and longer every year. What if they're living past their retirement age, past the amount of years they were kind of expecting to, right? Well, at age 85, they have an enhanced payout, like a supplemental income if they're living past their investments. 4 benefits for the price of 1. Now, North American isn't just going to pay them out their initial premium plus the bonus, right? If at any point they need those benefits, North American is going to take the premium with that premium bonus of 22%. And then let's say 10 years down the line, they've had $100,000 of interest that's been credited to their income benefit base. The time they need that one of those 4 benefits, North American is going to give their clients 150% of their net credited interest. So instead of 100, they're going to give them $150,000, add that to the initial premium and bonus, and your client is going to be paid out $272,000 over whatever period they use based off the benefit. How cool is that? And oh, by the way, they don't need to decide which benefit they're going to use at the time of application. They may go into it thinking they're going to need that ADL benefit, but then Social Security is reduced. All right, I got to turn on the Social Security benefit now. Maybe they don't use any of the living benefits. Perfect. The beneficiaries can take advantage of that enhanced benefit base amount. How does it look like based off of $5,000? Well, remember that ADL benefit's 7 annual payout. Over 7 years, the client's going to get $71,429. Another beautiful thing about this, let's say the client takes the first 3 years of payments and passes away after year 3. The beneficiaries take over the rest of the payments for the next 4 years. The clients are made whole. Enhanced death benefit. This math is so easy, I can do this. $500,000 divided by 5. Beneficiaries are getting $100,000 over 5 years. Your enhanced payout benefit, that's an annuitization-like calculation. That's going to pay them out annually of $39,168 for the rest of their life. If that annuitization payments aren't, by the time they pass away, don't meet $500,000, the beneficiaries continue those payments until they equal $500,000. The Social Security, I don't have a slide for, but take $500,000 divided by 12. Whatever that equates to is going to be what they're paid out over those 12 years. My visual learners here, again, $100,000. You have that 22% premium bonus. Over the next 10 years, that accumulation grows to $224,000. Well, let's say in year 10, if they need to take an enhanced payout, or I'm sorry, if they need to take any of those benefits, their enhanced benefit base is going to be $305,704 for any of those 4 benefits. Here's the state approval map. Depending on where you are, looks like North Carolina, Georgia, Florida, Texas, all of those states offer all of them. For my partners and clients in New Jersey, Connecticut, Massachusetts, Oregon, Washington, that plus version, the last one I spoke about, is not offered in that state. And for any of my New York Alliance partners, I apologize, but you probably already know this. New York, it does not allow any of these solutions. If you have New York agents, you can still come to me. I've got stuff for them with Nationwide. Nationwide is flexible with the cross-border sales in New York, but for any of my other solutions, unfortunately, that is not available. Now, with that being said, before I turn it over for some Q&A, if we have any questions, I do want to circle back. The last 45 minutes or so, I spoke about a lot of information. That was a lot, right? Again, what I ask of you all on this call is if you have a client, you need to get in touch with myself and my colleague, April Falk. Just give us the chance to do some case design. Let us speak about our solutions for your client scenarios. We are willing to help you all close those deals. You just need to reach out to us and give us a chance, right? We will help you become experts in all of our solutions. I work with Adam Burge all the time. He has been a consistent producer of Annexus fixed indexed annuities. And he really doesn't even need my help anymore because we've gone over all of our solutions all the time. However, if you're a new agent, take advantage of having us as a resource. Think of us as like an extension to Chris Norris and Amber and their team, right? We are willing to help you with your fixed indexed annuity business. Just reach out. Let us do a little consultation for you, send over some illustrations, help you walk through those. So with that, I appreciate you all sticking with me for the entire 45 minutes. Again, I know it was a lot, and I'm more than happy to stay on for 10 minutes or so and answer any questions if there are any.
There's a couple of questions there that I just put on from YouTube. I
Yeah,
just put it in the Zoom chat.
absolutely. So the first question is, with North American, are you saying that they can have 1 or 2 year strategies? So say someone is 67 or retired and has $100,000, can they benefit from North American? With 1 or 2 year strategies, does that mean they can turn on income? So great question. What I mean by 1 or 2 year strategies is strategy terms or point to points, right? North American, they have that performance strategy ladder, but it can be a little confusing to first learn, right? My point is they have 1 or 2 year strategy options to use, or 1 or 2 year point to points to use, which means that they're going to get crediting on their accumulation value every 1 or 2 years. Now, for income is going to be a nationwide New Heights select play. North American is not going to be your go-to for guaranteed income.
And I'm looking here, and I think that was the only question I saw.
Cool.
All the other ones, people were chatting back and forth, and I think answered some of the questions. So it ended up kind of working
Awesome.
out. But
Awesome.
yeah,
I will say, I always forget. Sorry to interrupt you, Chandler.
no, you're good.
Just a quick rule point of reference. All of our solutions are one-time premiums. We do not do multiple premium solutions, meaning what you client puts in as the original premium, they can't add to it down the line. So just FYI for anyone, we only do single premiums. Also, the minimums for America and Nationwide, it's a $10,000 minimum. Oops, sorry, the lights keep going out here. For Nationwide and America, it's a $10,000 minimum. For North American, it is a $25,000 minimum.
Awesome. And I think lastly, too, one thing I was thinking about is just the best place to for people to get a hold of you and your team. Where should they go? What should
Absolutely.
they do?
They can reach out to myself. I'll put my email in the chat, Chandler, and if you don't mind, just
Yeah, of course.
throwing that over. And then I put our phone in. Myself and my colleague April Falk, we are more than happy to help. And I'll put one more email in here. This is the team email. You guys can. I put my work one in there. I travel quite a bit, so if I can't talk to you, I think I don't have. I'm traveling or whatever. Reach out to naa@annexus.com. That's myself and April Falk's email. One of us is more than happy to help out with whatever you guys need.
Awesome. I just dropped all that on the YouTube chat, and I'll put all that in our Discord too, because I know people will love that. So,
Cool.
Alex, thank you so much, man. Watching that and seeing all the slides and just seeing, because I'm definitely a visual learner, so I appreciate you with all the
Sure.
visuals because that's how I learn. So seeing all that is just it's a no-brainer, right? Of just why
Yeah.
wouldn't you? So I think this is
Yeah.
great, and we're gonna put this all together too, so we can send it out for some training, so that we can get some more people
Yeah.
comfortable writing annuities. That's always been the biggest
Yeah.
thing, right? Getting them comfortable. So thank you so much for coming
Great.
on today, man. That was
How to get
amazing.
out there. Absolutely. I appreciate it. I appreciate Chandler, Steven, and partners like Adam, who's been a big supporter of Annexus. So I do want to give a shout out to him as well. We really appreciate the business. We're here for you guys and we want to partner with you and your team. So anything we can do to help, guys, please feel free to reach out. But have a great
Awesome.
rest of your day. Have a great Monday.
Thank you. Take care, man.
See you guys. Talk soon.
Awesome. Well, thank you everyone for hopping on. We're gonna have a busy, busy week ahead of us. So if you need anything, reach out to us, reach out in the Discord. I'm gonna get all of this edited together so we can get this training out to everyone. But thank you again so much for coming on and hope you guys are all having a great Monday so far and hope you have a great week.